the same thing, but they managed to put that one back in the can as they always do. You know, look, it's a cat and mouse game with the Fed, but they're losing. They're going to go down. You know, the currency is going to be massively debased, massively, and
A few weeks ago, the U.S. Federal Reserve lowered interest rates for the first time since March 2020, which caused cryptocurrency values to skyrocket. Until Bitcoin hit $100,000, many analysts thought the central bank's announcement had set off the expected pump and predicted a larger one. The global economy and markets are still unstable in spite of recent developments, such as China's stimulus plan. Popular unidentified in a recent YouTube video, Bitcoin expert Plan B contrasts the current market with previous bull markets. As per Plan B, a significant amount of the present price fluctuations can be attributed to the premature arrival of the prehab pump that we witnessed earlier this year, which was propelled by the enthusiasm around the ETF approvals. This marked the first time in 4 years that the bull market's characteristics were altered. Cycles, according to an analyst and former institutional investor, Bitcoin will rise in the upcoming weeks and months due to a number of variables, including the U.S. election and a central bank rate cut. Plan B stated that the market appeared strange following the lengthy halt and the sharp increase brought on the ETF enthusiasm. Fortunately, Plan B thinks this strangeness will soon come to an end. Let's watch the discussion by Larry.
I think it'd be helpful to give you some historical perspective. This reminds me very much of 2019 and 2020 when Bitcoin was kind of stuck in the 5s and 10K range, and gold was stuck at 1365. And gold broke out first, well before COVID happened or anything else. And then COVID happened, and then Bitcoin just came racing by. And so gold was up in that event. Gold was up, I don't know, 50, 60, 70%. Bitcoin was up 300%. So to answer your question and to allay your concerns, the year is not over. And I'll say it here first. I think we'll see 6 figures this year, this calendar year. Yeah. And I think James would agree with us because he does a lot of good technical analysis. If you look at it, there's a bull flag forming with a downward slope. And what is it, James? 73?
Yeah, it's been forming for months now.
Right. And when it breaks 73, it's going to squirt to 100 like lickety split. Don't get half mass. So you add another 20 points, 24 points to that, and you easily get to 80, high 80s, low 90s, and it'll overshoot probably into the 100,000 range. So
you guys are feeling bullish.
Oh, absolutely. It's just relax. It's all coming our way. And I mean, and this is without something, without an accident, without something, quote unquote, breaking. I mean, I think there's a high probability that sometime in the next 18 months, something serious will break, like the stock market or whatever. And, the bazookas will come out. So you also had a mini break in March of 23, when Silicon Valley Bank failed.
Yeah.
Right? I mean, it's the same thing, but they managed to put that one back in the can as they always do. Look, it's a cat and mouse game with the Fed, but they're losing. They're going to go down. The currency is going to be massively debased, massively, and when it's all over, there won't be a Federal Reserve anymore, and that'll be a very good thing. I still believe that. Yeah, I mean, I think they'll keep cutting rates. They'll try and keep things going. They'll try and keep the market up. And it's like they've got the plates spinning, and they can keep them spinning as long as possible. But I mean, this is where I really think David Hunter is brilliant on this. I kind of share his view that at some point a plate is going to drop. They're going to be too many things, and that'll lead to the market rolling over, stock market. And that's a big negative liquidity event, right? A lot of money goes to money heaven when the stock market goes down 40%. Everybody feels like they're not as rich. The economy starts to slow. People start to do layoffs, and just one thing leads to another. And initially the impulse will be what's going on right now, which is you buy the shorter term bonds because you get a decent yield. But as even James pointed out recently, the long bond has actually been going up. And James has done much more forensics on this. But I think what he's discovered is that the demand the reason we've got so much short-term debt is there's no demand for the long-term debt. I mean, the suckers at the card table are the people who hold long-term U.S. government debt, knowing it's going to be debased. And guess what? The suckers are getting up and they're walking away from the table. They're like, hey, I'm not going to do this anymore. Yeah, and so, and this, by the way, this is the exact same pattern that happens with emerging economies that go into debt crises. They
Right.
get to the point where they have to fund all of their debt short term, because nobody with half a brain would ever own the long-term debt of a country that's broken and out of control. And that's where we're going. And what people don't see is they think, well, this is the world's reserve currency. We got the biggest military, as Joe Biden says. This is the United States of America. Well, guess what? You follow the same stupid policies that everybody else in these emerging countries has followed for the last 100 years. You're going to get the same results. Your currency is going to go to zero.
Plan B juxtaposes the present stability of Bitcoin's price with the time from 2019 to 2020, during which Bitcoin's price surged dramatically following the predicted catalyst of central bank quantitative easing. During that period, considerable confusion and frustration ensued, particularly because of the pandemic's profound disruption of the market. Bitcoin remained approximately $10,000 for several months throughout that period. Plan B anticipates a comparable scenario following the U.S. elections in November. This is when dormant whales will re-enter the markets and central banks will inject further liquidity. This will result in an increase in the price of Bitcoin and other cryptocurrencies. Appreciated Sound Currency James Deluxe and Lawrence Lepard, two proponents cautioning against the global debt spiral, recently conversed with Natalie Brunell regarding their shared sentiments. Both believe that conditions are poised to deteriorate significantly due to central banks' impending monetary expansion to support their economies. These constitute some segments of the conversation.
And that all countries are running with fiat currency, and so they all have the same problem. And the Chinese made the mistake of kind of emulating us in terms of debt-based growth. They're not particularly popular, but what I will say is that a couple of the BRICS countries, have kind of seen the other side of this and said, oh, you know what? We prefer to save our money in neutral reserve assets. And that's part of why gold is going up. I mean, gold is going up on decreasing ETF demand. This isn't US investors buying gold, except at Costco, which is doing record gold sales. This is the BRICS saying, you know what, we can't store our wealth in fiat in Western currencies anymore. The yen's no good, the dollar's no good, the euro's no good. We're going to trade between ourselves using our own currencies, and to the degree there's an imbalance, we're going to net settle in gold. And this is why people don't understand this. I mean, gold is not priced in the right zip code. I mean, if not even close. I mean, I stole that from Luke Groman. Not even close. I mean, if we were to go to a full backing of the gold that we have, assuming we have the gold, which we say we have, which I don't think we do, but if we were to go to a full backing, the math is such that, the way we were in 71, breaking the standard, gold would have to be at $80,000 an ounce. Gold's at $2,700 an ounce, $2,600 an ounce.
Yeah.
That's a big difference. That's a lot of zip codes from here to there. So,
Sure.
and so what we're seeing is something that, and this is why history books are what people have to read if they're thinking about investing. We're seeing something that has not happened in 100 years. Last time this happened was after World War I, where a ton of sovereign currencies got all messed up because everybody, spent way too much money fighting a stupid and pointless war. I agree with all that, but to address your issue of what they could do to mess us up, look, Roosevelt grabbed the gold in 33, devalued the dollar by 70%, overnight, and, used that as a way to start to get out of the Depression. This is existential for them. I mean, I could very easily see the, Save the American Dollar Act, which, says that if you own gold or Bitcoin, you got to report what you own, and that the taxes on owning those are now 75 or 80%. And, and even so far as, I mean, this is why I think it's okay to buy an ETF if you don't worry about this risk. But me personally, other than my IRAs, which I can't buy Bitcoin any other way, I think self-sovereignty is so important because, just as some countries in the past have said, well, our currency is shit, we're going to grab all the gold mines and refill our coffers. It would be very easy for the United States government to pass a law saying, you know what, let's just cash out everybody who's got a Bitcoin ETF. We'll send them dollars, and that Bitcoin will now belong to the government, right? And
just
and
a
that
note.
then so you don't. Oh, and by the way, you can be sure that the day after that happened, Bitcoin would go up 1,000%.
Yeah.
So
you're right.
it really does go to, not your keys, not your coins, right? And do I underestimate what these people do? Absolutely not. I mean, they've effed me at every single chance they've had for the last 40 years. And, they're evil and, they're psychopathic. And yeah, they'll do it. They'll do it if they can get enough people and they can somehow justify doing it. It is true, Natalie, and it's going to protect you. But here's the problem: your society might be wrecked. I mean, you got to read the mandibles, right? I mean, if
I read it, yeah.
right. So
Yeah.
if the dollar, if the dollar fails, you're going to be really glad that you own things that can't be printed, silver, gold, Bitcoin. But you're not going to really like the way the world looks, in that scenario. It's not going to be a pretty scenario. But probably what will happen is, countries will break up and new countries will emerge, and there'll be countries that, that have, rule of law and protect assets and protect citizens' rights, and, productive citizens will move there. And, look, none of us can foresee how this is going to unfold.
Right.
And I would prefer for it to unfold in a very balanced way where, as James says,
Right.
the U.S. government embraces Bitcoin, puts it on its balance sheet, backs the dollar. I mean, that's all great and wonderful. The problem is, look at the jokers we've got in Washington, D.C. right now. What are the odds of that happening? I mean, it's going to take some really enlightened leadership. I mean,
and a long
Kennedy,
time. It's
yeah,
not going
it's
to
going
happen
to take some
overnight.
time.
The U.S. government piled on yet another large debt. In reaction to the $24 billion increase in the national debt on social media, the Treasury Department said that the U.S. budget deficit was $11.897 trillion, up 24% over the same period in 2023. Platform Good Evening was written by X. Generous. On the first day of the new fiscal year, the U.S. Treasury's debt increased by $204 billion, reaching $35.7 trillion. Considering that the U.S. national debt hit $33 trillion on September 18, 2023, just over a year ago, it's difficult to have a decent night, much less a spectacular one. Experts have long warned that if urgent and required actions are not done right away, the situation appears to be fast getting worse. Instead of hundreds of billions of dollars, we will soon be talking about trillions added in a single day. The good news is that asset prices rise when more are printed, and as cryptocurrency is the fastest horse in the race, it will rise more quickly than all other extravagant. Every part of this will lead to more, reads another tweet. As central banks reduce the money supply and asset inflation, keep your eyes on the opportunities. Thank you for watching.